Hello, everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. That's me, Romulus. This show is sponsored by Backpack Trader. Our goal is to help you become the best version of the backpack trader you can possibly become. Today, the Ancient Roman Trading Secret is going to bust a couple of myths. Anybody watch the television show Mythbusters? Those guys are geniuses. I may not be a genius, but I can bust a few myths. Let's get busting, shall we? The first myth is all the hot air coming out of the cold climate from Davos, Switzerland. It's one political and business and academic leader after another blowing smoke up the rest of our asses and telling us that, hey, everything is just fine. You've got nothing to worry about. There's nothing to see here. The first load of bull was coming from the CEO of Bank of America, Brian Moynihan. He's shoveling stuff all over Davos, Switzerland, thinking that there's still a snowstorm going on, trying to tell us that everything is fine. Why? Because all of his data, analytics, and information are telling him that the American consumer is just doing great. Everything's record territory. Again, nothing to worry about. First of all, if there's nothing to worry about, Mr. Moynihan, then why is your stock right there only a couple of days ago trading at multi-year lows? And why is the entire financial sector doing the same exact thing? Riddle me that, Brian. And if the American consumer is doing so fine, then why is every single stock related to the American consumer in the absolute toilet? Again, we are waiting for an explanation. Let's go through it one at a time, shall we? Well, a couple of weeks ago, we had Target get absolutely obliterated. Now, this is kind of a little bit of a canary. Next thing, Walmart got smashed. Walmart's the largest retailer in the world. Stock, again, totally annihilated in just a couple of weeks of trading. The second largest retailer in the world is Amazon. Amazon stock, boy, this thing could practically double from here, and I don't think it would hit a new all-time high. Jeff Bezos and many other insiders were dumping and selling and just getting rid of as much stock as they possibly could back here in November, right there at the all-time highs. Were you listening? My Centurions were noted about this in many of the written reports that we were sending out. Don't believe me? Just call and check. Any old time. Anyway, so Walmart and Amazon, two of the largest retailers on the planet, are both seeing their stocks get creamed. Absolutely creamed. All right, let's keep going. Nike, one of the premier consumer brands out there in the world. Stock, wow, look at that. Just this morning, trading at a new, multi-year low, everybody. How about that? Here's another consumer brand. Maybe you've heard of this. If not, well, go get yourself a cup of coffee. It might help. Starbucks, multi-year lows just last week. One of the more expensive items that people like us would ever buy, besides houses, are cars, right? Well, let's check the car makers, okay? Ford, multi-year lows. General Motors, multi-year lows. Heck, even Tesla, multi-month lows and knocking on the door of just obliteration over here. Okay, this stock goes a little bit lower, and Elon Musk is going to owe some banker somewhere a big pile of cobalt. Mr. Moynihan also pointed out that credit card situations are improving for the American consumer. Again, let's look at the stocks. Here's Visa, one of the largest credit card companies in the world. And the stock price, not quite as ugly as some of the others we looked at, but it sure isn't pretty. And here is, well, that's not MasterCard. Let's check which one MasterCard is. We'll find it, everybody. MA, okay. Also not a pretty looking stock. Again, if things are so good in American consumer land, then why is every single publicly traded company attached to the welfare of the American consumer as ugly as they have been? I mean, the stock market, what is it, lying to us? And Mr. Moynihan is right? Please. That is insanity. These are the same guys that told us in late 2007 that the banking industry was fine. That we should believe these guys all the way to the bank, baby. Come on now. Let's get real. These stocks have bad intentions for you and your investments. And if you're listening, Mr. Moynihan, right this second, right now, stop believing the BS nonsense data that is telling you that everything's fine, that the American consumer once again is going to bail out the stock market and the economy. The stocks are telling you that is not going to happen. This is different. This is like 2008. Wake up, people. Wake up. This is dangerous. I have been trying to tell you guys for months how risky this market is. And everyone who invested in Snapchat 6 months ago or 2 days ago, maybe you're starting to learn. Look, I understand that the entire investing community at the professional institutional level looks at Luna and says, that's just those kids being silly kids. I mean, they were just experimenting over there. It doesn't mean anything to us. It doesn't mean anything to you. When Target drops by half in a matter of months, when Cisco, one of the largest technology companies on the planet, gets obliterated, when the largest retailer in the world gets just taken out and shot, this is trying to tell you things are different today. You have got to wake up and listen. The next myth we're busting today is this nonsense coming from the home industry, residential home industry, whether it's the National Association of Realtors, Zillow, or any of the grouping, the consortium of new home builders. They foist layers and layers and levels of nonsense on us all the time. Let's go through it. We've been hearing this BS about rising home prices. That's great. The American consumer doing fantastic with their new homes that they bought recently or homes that they bought a while ago. The values are just skyrocketing. Look, values aren't skyrocketing. Look at this. The sales numbers are declining. Values are skyrocketing because the sales are declining, and one rich person bought a big house in the Hamptons or in Beverly Hills and skewed the entire data set. According to Investors Business Daily, April, new homes in America sales fell almost 17% versus March. Annualized rate of 591,000. Do you know how far away that was from the estimates of 750,000? Well, it's a bunch, I'll tell you that. Oh, and another myth that we've been hearing from these liars. The reason home prices are going up, there's no supply. There's no supply out there. It's not that people don't want to buy homes. They don't care about the rising prices. They just can't find homes for sale. They can't find a supply. Oh, yeah? How about this? The total month supply of new homes jumped to 9 months from 6.5 in just 1 month. It had an almost 50% increase in just 1 month. There's a 9-month supply of new homes in the market right now. There's plenty of inventory. There's plenty of inventory. Last time inventory was this high, we have to go back quite a long time. And if we don't believe those stats, you don't believe me, no problem. Let's go to the stock market where all the stuff eventually makes more sense than anything else I've ever heard or seen in my entire career. Okay, here's a basket of home building companies. So there are companies in here like Pulte, Lennar, those types of big national operations. Look at that. The stock just yesterday hit a new multi-year low. Okay, let's keep going. Here's a company, one of the largest mortgage servicers and providers in the country. Just a couple of trading days ago, multi-year low. How about Home Depot? We've seen Target, Walmart, Costco, Amazon. These stocks get obliterated. Home Depot, obviously a big one in the retail, American consumer, plus centered in the home industry. Just a few trading days ago. A what? Everybody, do I hear you out there? What is that? A new multi-year low, Romulus. That's exactly right. Tell me this. If the American consumer is doing so well and the home industry is fine, there's no problem. It's just not a lot of inventory, although we shattered that myth. Then why are all these stocks looking like they're about to almost disappear? This is serious. This is incredibly serious. Look, I lived and traded through the dot-com crash, made money. I lived and traded through 2008, made money. Second worst year in U.S. stock market history. I was one of the top performing professional money managers on earth that year, as a matter of fact. Made almost a 16% rate of return that year. It's reminding me of all of that. But worse than that, I didn't trade through the 70s. I was still a young little centurion at the time, but I've studied it in depth with a lot of attention to detail. And there are aspects of what's going on now that are reminding me of what took place in the 1970s. And why is that bothersome? Why is it something we should be concerned about? Because the Dow Jones Industrial Average first crossed 1,000 in 1966, didn't get permanently above it until 16 years later. 16 years later. And that negatively impacted standard of living, life on Earth as we know it, everywhere. These are reasons to be extremely cautious, everybody. Hey, one thing you might notice out there in ancient Roman trading land, there's something that is quite obvious, but its absence is what makes it obvious. It's again the volume, okay? Volume on up days versus down days. See that right there? The Russell 2000 IWM is just a perfect example. It's got a nice little up day, over 1% gain on May 23rd. Volume disappears, okay? Then next day it drops, price drops, volume goes up. Today, price is up, volume is already disappearing, even though we have a couple of hours left. You can tell that volume is not there. This is all bearish behavior. Look, this market is just tough right now. It's bearish. It's challenging. Centurions are making money. Actually, we're on fire. Actually, we're ridiculous. The trades we've been doing the last 8 weeks have been absolutely ridiculous. But that's beside the point. I know a lot of you out there that are not Centurions, that are not in the Club Romulus, are getting seriously hurt right now. The myths out there are hot and heavy. They're everywhere, whether it's from the housing professionals telling us, oh yeah, there's no problem. Prices are doing what they're doing. It's because there's low inventory. We know that's a lie. Or whether it's CEOs of big companies or politicians, central bank figures, they're all telling you one thing. They're all telling you everything's fine. Everything is not fine, okay? Everything is not fine. The market is telling you it's not fine. And the market will tell you when it is okay. I'll be perfectly comfortable and excited to get long this market on an aggressive basis, but that hasn't been. And by the way, for those of you who are the Robinhood, Cathie Wood, Reddit-style traders out there, you might be very surprised to hear this. There's something good going on in SoFi. There's a bullish development going on in SoFi. I'm going to tell you all about it tomorrow. I'm excited already. And this is your old buddy Romulus. This has been Ancient Roman Trading Secrets, and I will see you tomorrow. That's all for now.